Are you tired of losing money in the financial markets? Do you want to learn how to trade using smart money concepts? This video is for you. I will teach you how to trade the smart money concept, starting from how to analyze and read price action on the price charts down to how to look for trading opportunities. Understanding smart money concepts is crucial for success in the financial markets. And if you are interested in learning how to trade smart money concepts, I will show you exactly how to do it in this video. The example I will be using to explain this was actually shared on my Telegram channel. It was shared on my Telegram channel, and from what you can see here, this is GBP card, the 1 hour time frame. As you can see, this was the setup when it was shared, and from what you can see here, the setup played out perfectly. So this is the setup I will be breaking down in today's video. So if you are new to this channel, here is Born to Trade. Consider subscribing to the channel, and if you are interested in joining the Telegram channel I just showed you right now, the link is in the description and you can look to join us today. Now, how to trade with smart money concepts. The very first thing you should understand how to do is to read market structure. If you understand how to read market structure, you've taken the very first step in understanding smart money concepts. And after understanding market structure, the next thing you need to understand is supply and demand. Understanding the concept of supply and demand, then you look to talk about liquidity, and liquidity is very important in understanding how to trade with smart money concept. Now, talking about market structure, this is GBP card, the daily time frame, and what can you see? Price is in an uptrend. Looking from here, price was in a downtrend, and over here we get a change in market structure. After this change in market structure right here, this was on 29th September 2022. We got this change of market structure, and since then we've seen price is in an uptrend. And now that price is in an uptrend, what are you going to look for? You're going to look to go long, okay? Because the daily time frame is showing us that price is in an uptrend. But that doesn't mean you can't look for short opportunities. You can actually look for short opportunities. If you watch the video where I talked about top-down analysis, I explained how you can look for short opportunities if you're trading with smart money concept. So you can see price was in an uptrend over here. And from what we can see over here, you can see that we have a break of structure right here, and after the break of structure, price is now pushing to the downside. We're getting a push to the downside. If you try to measure with your FIB2 from this low to this high, what you can see is that price is below the 50%, and 50% is the equilibrium level. Now price is at the discount level. Now that price is at the discount level, it's okay to look for your longs, because price is already in an uptrend. It's okay to look for trading opportunity. So we'll be going down to the 1 minute time frame to see how we're going to find trading opportunities. And this is the 1 hour time frame, okay? You can see we switched from the daily time frame, which showed us that price was in an uptrend. And remember, when we measured with our FIB2, we saw that price is already at the discount level, and it's okay to look for your buying opportunities, okay? From what you can see from here, we have a change of character somewhere here, and from there you see price has been pushing to the downside, and over here price equally took this significant low right here. And from what we can actually see over here, you can see price is in an accumulation. And whenever you see price in an accumulation phase, we usually do nothing at that period, because price is accumulating orders and price is just building liquidity at this area, okay? This accumulation right here, this is simply price building liquidity, because you can see the price action right here is efficient. There is no inefficiency at this area. Price is simply building liquidity at this area. Now, as a smart money trader, if I want to look for trading opportunity, let's say for instance, I want to look for shorts. I want to go short from this particular area. What will I be looking for? Firstly, what I will be doing is that I will map out my zone right here. You see, we have a very good zone which we can actually look to trade from over here. So firstly, I will map out my zone over here, and if price sweeps this liquidity, because you see price builds liquidity at this area, if price sweeps this liquidity, I'll be looking to enter at this particular zone and expect price to push to the downside, okay? I will look to trade to the downside. And in another case, what if price takes liquidity at the downside first? You see price push to the downside, sweeps this liquidity and gives me something like this, okay? So if I want to go long from this area, what I want to see price do is price sweeps the liquidity at this low and push it to the upside rapidly, leaving a very good order block to trade from, or leaving a very good demand zone to trade from at this area, okay? So now if price gives me something like this, this is when I'll be looking to take trade from this area, and I will look to trade to the upside because you know the overall market structure is an uptrend. Price has been in an uptrend. Okay, so this is how you build trading ideas if you are trading with smart money concept. What I just explained now is more like the power of 3, where we get accumulation. Okay, where we get accumulation because as you can see, price is accumulating at this area, and after this accumulation we want to see the manipulation phase, where we see price manipulates people out of the trade. Those that place their stop loss below this load, you see price taking these stop orders, and you see price pushed, which is the distribution phase, before we see price coming to mitigate this zone and push to the upside. Okay, so this is a very simple strategy. So what I'm going to do right now is we're going to play price forward and see what we have. Remember what I explained in those two cases. If I want to go long or if I want to go short, what I'll be expecting to see from price. And what can we see right now? What you see is that price fails to sweep the liquidity above this high, but instead what do we see? We see price come right now, sweeps the liquidity at this low. Now that price sweeps this liquidity, this is when you have to be very alert. Keep your eyes on the price chart to see what price is going to do. If price continues to push to the upside with this momentum I'm seeing right now in the market, I'm going to map out my zone right here. And what is my expectation? My expectation is that price is going to come back, mitigate this zone and push to the upside. Okay, this is what I'm expecting price to do right now. And what do we actually see? We see price continue to push to the downside. Price didn't push to the upside, so we look to go long. So what price did is that price sweeps the liquidity at that low and it continues. Now most traders, what they're going to do is that they're going to map out their break of structure, and some other people will look at this order block right here, because if you watch the video on how to map out a high probability order block, you're going to see price has actually presented a very good order block, which is a high probability one. So if you want to watch the video on high probability order block, I will link it in description so you can check it after now. So what can we actually see here? We see price sweeps the liquidity right here. According to the rules, we want to see a sweep of liquidity, and after that sweep of liquidity, we want to see price push to the downside with momentum. Okay, now price sweeps the liquidity and it's pushed to the downside with momentum. Now the candles that swept that liquidity is our order block. Now it's okay to map out this candle as your order block. Right now, what is our expectation? Our expectation is that price is gonna come back, mitigate this and push the downside. But my question is, are you gonna be looking to trade from this zone? For me, the way I trade, I won't look to trade from this particular zone. Why won't I trade from this zone? If you look at this area, you see we still have liquidity resting at this high right here. Okay, liquidity is still resting at this high. So for me, I would say that this is a smart money trap, and me personally, the way I trade, I won't be looking to trade from this particular zone. Even though the order block met the criteria for a high probability order block, it doesn't mean I'm going to trade from here, because price has not swept the liquidity at this high. Price has not swept the liquidity at this particular high right here. So let's play price forward and see if price actually mitigated that zone. And you see price continues to push to the downside without coming back to mitigate that particular zone over there. Now remember, price is still dropping deep into the discount area. It's okay to look to buy from these areas. If you see buying opportunity, it's okay to take it because it's in line the overall market trend like we saw when we were on the daily time frame. And after that, what do we actually see price do? You see price continues to push to the downside. Okay, you see price push to the downside. You have a break of structure right here, and if you continue to look, we see we have, this was not actually a break of structure. Price sweeps the liquidity at this low, and let's see what we get after that. And boom, you see price pushing to the upside. Okay, but did price actually mitigate this zone? No, price didn't mitigate this zone. What do we see price do? Price came to fill this fair value gap over here. You see price went there, fill the fair value gap, and you see how price is reacting to the downside. Now look at this way. Do you know that we have a change of character right here? This is a change of character, and if you think this high is not a very good high, you can go ahead and consider this particular high right here. And a change of character simply explains that we are about to have a possible shift in market structure. Okay, price could shift right now, and from what you can actually see, you can see that this actually met the setup for a high probability order block. The way I choose my high probability order block, you can see it's met it because this was a liquidity sweep, and after that you see price push the upside with momentum. You can see this momentum and the momentum actually left this fair value gap right here. You can see this gap between this candle and this was the fair value gap price left, and you see the momentum price pushed away from here, which caused this change of character. So you can go ahead right now, map out this other block, because that's the block that swept the liquidity at this particular low. Okay, so you can go ahead, map this out as your other block, and I will be looking to trade from this particular zone to go long in direction with the overall market trend. And what can we actually see? You see price starts building liquidity, which tells you that this is a very good trading setup. Okay, you see price starts building liquidity at this zone, and this was exactly how I found that trading opportunity, that particular trading setup that was shared on the Telegram channel. Let me show you once more. Okay, you see this particular setup that was shared. This was how I found that particular setup. After using those price action, this was how the setup was formed. So you see price built liquidity above our zone, which makes this a high probability setup for me. The way I look for my high probability setup, this is a very good setup for me. Why is this a very good setup? Firstly, you see price takes liquidity at this low. After price takes the liquidity, you see this rapid move to the upside. You see how price pushed rapidly to the upside, and now we have a change of character. So why I mapped these two change of character is, if you are not satisfied, if you think the price action here is not okay for you and you think this is not a valid change of character, you can go ahead and identify this one we have right here as your change of character. And after that, what else can we see? You see price left a fair value gap right here, which tells you that there is a need for price to come back and fill in this gap. We have our other block right here, and now price is building liquidity above our zone. Okay, so this is a very good trading opportunity for me, and that's why I actually shared that particular one. And after that, what do we see? Price built small liquidity, and now boom, you see price mitigates our zone. Okay, you see after price builds liquidity, you see now price sweeps the liquidity, filling this fair value gap, and now price mitigates our zone, and you see price push to the upside. Okay, you see price pushing to the upside, heading to our target. So where is our target? There are a few places we can actually target. You can look to target this high, or you can go ahead and target this particular high right here. Okay, that just depends on your risk to reward. Okay, and you know, risk to reward is actually very important. Know what you are risking and know what you are gaining in a trade. Now you see price hits the first target. Okay, this is a very good target, and now it came very close to the second target, and we see price retracing to the downside. Now playing price forward, now you see some slow price action right here, price accumulating a little more, and now you see price continue to push to the downside, and now this is where price is currently. Okay, this is the current price right now, and if you try to extend this, you can see price mitigates this particular zone, and we're getting a little reaction to the downside. And remember what I said, I won't be looking to trade from that particular zone because we have liquidity resting at this high right here. So trading from that zone is not gonna be very okay for me, because I see that as a liquidity trap. Okay, I see that as a smart money trap. Okay, so this trade was a very good trade because the stop loss was 17 pips and our target was actually 120 pips. So I think I should show you one more example, and this particular one I didn't actually share this one. This one was on my personal watch list. So the second one we'll be considering now is USD CHF. So this is USD CHF. This is the 1 hour time frame, and if you look from here, price was in an uptrend. Very easy to identify, very easy to understand. Just like I explained, if you want to take the best trade, if you want to understand smart money concept perfectly, the very first thing you should know and read perfectly is how to read market structure. Learn about that. Look for videos. I have a video on market structure. If you have another mentor who you like watching his or her videos, check them out. Try to learn how to read market structure, because if you understand market structure, you are heading to the right direction, because you can read any price action. So the market structure, what can we see? Price is in an uptrend, and where is price heading to? Price is going to take this particular high right here. Okay, we're looking to see price take this particular high, because as you see, the overall market structure is in an uptrend, and price sweeps the liquidity above the high. But what I want to see price do right now is close above that high before we look to get a very good pullback to the downside. Okay, so what price did right here was it actually took the liquidity above the high, and we get this pullback. So if you try to read the internal structure right here, what you can see is that you have a break of structure right here, and price got a little pullback, mitigates this candle right here, and you see another massive push to the upside. Why price push to the upside? We see this imbalance right here. We see this fair value gap, a very big gap right here. And now what can we actually see? Price takes the low, and it's okay to say that this is a liquidity sweep. Now the way I trade, I map this out as my order block, which I'll be looking to trade from. What can you actually see here? Price builds liquidity above this zone, and each time I see something like this, it gives me joy because these are my kind of setup and it meets my criteria. Okay, it meets my rules, the rules I follow when I want to take a trade. And what can we actually see price do? Price push to the upside a little more, spikes above the high, takes that high, and price push to the downside, and it mitigates this particular zone. And after that, what do we see? Price push to the upside, and it hits our target because we're trading from this low. And where is our target? Our target is this particular high right here. And this particular trade, the stop loss was 14 pips and the target was 44 pips. So it was a very good trade for me, and this is exactly how to trade with smart money concepts. And I hope this video has helped you in a way to understand how to trade smart money concepts and how you can actually make money from the financial markets, how you can actually read price action, and how you can look for trading opportunities. And I hope this video was helpful. That's all for today, and I hope you got value from today's video. Like I said, if you are new to the channel, consider subscribing. Here is Born to Trade, and see you in the next video.